Hey everyone, welcome back to Corporate Dakota, the place where we try to make sense of the big bucks and even bigger decisions shaking up the business world. Today we're diving into a company that's been making some interesting moves, and let's just say their latest report has a few surprises up its sleeve, so buckle up. Also, if you're new here, make sure you subscribe so you don't miss out on these insights. And hey, we've got a fantastic community forming on our Discord server. Link in the description below, so come join the conversation. Alright, let's get straight to it. We're looking at a Form 8K filing from Propanc Biopharma Incorporated, and the date of the earliest event reported here is the 4th of November 2025. Now, what exactly happened on that day that warranted such an immediate report? Well, it looks like the company closed a significant transaction that affects their shareholders and their long-term plans. So Propanc Biopharma Incorporated, the company we're focusing on, filed this report. They're incorporated in Delaware, which is common for many publicly traded companies, and their file number is 001-42806. Now, for investors keeping an eye on Propanc Biopharma Incorporated, you'll know their common stock trades on the Nasdaq Stock Market LLC under the ticker symbol PPCB. This is important context as we look at the financial details. The first major item here really dives into how Propanc Biopharma Incorporated raised some capital. It's all about the unregistered sales of equity securities. Back on the 7th of October 2025, they had entered into what's called a securities purchase agreement with a group named Hexstone Capital LLC. This agreement was related to a private placement, meaning they were selling shares directly to Hexstone Capital LLC without going through the usual public offering process. Fast forward to the 4th of November 2025, all the conditions for this deal were met, and they officially closed the transaction. So what did Hexstone Capital LLC get for their money? They purchased 100 shares of something called Series C preferred stock. On top of that, they also received a warrant. Think of a warrant like an option it gives Hexstone Capital LLC the right, but not the obligation to buy more shares in the future. In this case, it's a warrant to purchase up to an additional 9,900 shares of Series C preferred stock. The price for each of these future shares through the warrant is set at $10,000 per warrant share. And what did Propanc Biopharma Incorporated receive in return for these shares and the warrant? A substantial cash payment of $1,099. This private placement was done under an exemption from registration, specifically Section 4 Gratuities Act, which is typically for transactions not involving a public offering. This means they didn't have to register these shares with the SEC in the usual way, which can save time and money. Now, let's switch gears to another important development on that same date, the 4th of November 2025. The company also made some changes to their foundational documents. They amended their certificate of incorporation and filed a certificate of designation with the Delaware Secretary of State. This new filing essentially authorized the creation and issuance of a new class of stock, up to 9,900 shares of what they're calling Series C preferred stock. The par value for this new stock is set at 1 cent per S-share. This move aligns with their overall charter, which allows for the issuance of up to 10 million shares of preferred stock. The board of directors has the authority to create different series of this preferred stock and define their specific rights and features. Here is where it gets really interesting for investors. These Series C preferred stock shares have a conversion feature. At any point after they're first issued, the holder, in this case Hexstone Capital LLC, can convert their preferred stock into common stock. The way this conversion works is by taking the stated value of each Series C preferred stock share, which is $10,000, and dividing it by the conversion price. Now, about that conversion price, it's going to be the lesser of two things. First, a fixed conversion price of $5 per S-share. Second, and this is often more favorable to the investor, especially if the stock price is volatile, it's 85% of the lowest trading price of the company's common stock. This calculation starts from the day the investor sends a notice to convert and ends on a specific trading day determined by the trading volume, with a minimum of 5 trading days involved. This mechanism is designed to protect the investor by allowing them to convert at a price that reflects the market value, with a bit of a discount. This means that if the common stock price drops significantly, the conversion price will also adjust downwards, potentially allowing the investor to get a lot more common shares for their preferred shares. Now, this is a summary of what these Series C preferred stock shares can do. The full official details are in what's called the Certificate of Designation, which is attached as Exhibit 4.1 to this report. It's really important to look at that full document if you want every single detail about the investor rights. And speaking of exhibits, the report clearly lists Exhibit 4.1 as the Certificate of Designations of Series C Preferred Stock of Propanc Biopharma Incorporated. This is the document that holds all the legal firepower for what we just discussed. Finally, we get to the signatures, which is where the company leadership officially signs off on the accuracy of the report. On the 10th of November 2025, James Nathaniels, who serves as the Chief Executive Officer of Propanc Biopharma Incorporated, signed this report confirming that everything in it is true and accurate to the best of his knowledge. Now, let's step back and look at the bigger picture here. Propanc Biopharma Incorporated is raising capital through private placements. Specifically with Hexstone Capital LLC, they're issuing preferred stock that can be converted into common stock, and the terms of that conversion are quite investor-friendly, especially with the provision tied to the lowest trading price. This tells us a few things. First, the company needs funds, and they're willing to offer attractive terms to secure them. Second, the structure of the preferred stock and its conversion rights suggests a strategy to potentially dilute the common stock if the price falls, which can impact existing common shareholders. From a Warren Buffett perspective, we're not seeing traditional financial statements in this particular 8K filing. However, the story here is about financing and the terms of that financing. The key figures are the cash received, $1,099,000, and the potential future dilution from those warrants and the convertible preferred stock. The conversion price mechanism, being the lesser of a fixed price or 85% of the lowest trading price, is designed to protect the investor from significant downside risk in the stock price. This means that if the stock price tanks, the investor gets more common shares for their investment, which increases potential future dilution for existing shareholders. It also suggests the company is either in a growth phase where it expects the stock price to rise, or it's facing some headwinds and wants to ensure it can still attract investment by offering favorable terms. A notable risk here is the potential for significant dilution of existing common stock if the stock price underperforms. The company's strategy seems to be prioritizing securing capital, which is crucial for operations and growth, but it comes at the cost of potentially reducing the ownership stake of current shareholders over time. The opportunity lies in how well Propanc Biopharma Incorporated utilizes this capital to drive its business forward and increase its overall value. If they can successfully deploy these funds to achieve their strategic goals, the dilutive effect might be worth it in the long run. However, if the business doesn't perform as expected, existing shareholders could see their percentage ownership shrink considerably. The company's direction seems focused on fundraising to fuel its operation, which is a common but often delicate balancing act. So that's our deep dive into this Propanc Biopharma Incorporated filing. What's your take on these financing terms and what they might mean for the company's future? Let us know in the comments below. If you found this breakdown useful, please hit that like button and don't forget to subscribe for more corporate analysis. And as always, join our growing community on Discord, linked in the description. Thanks for watching, and we'll see you in the next one.